Let's go ahead and get started with booking April. We have a special treat for April. What we'll do is we'll try to book as much as we can using this Add Receipt button, right? Remember, we can drag and drop PDFs, and this way we can book transactions. Now, once we work with this interface, we will see again the capabilities and limitations of that interface, and again, most importantly, debits and credits behind it. So let's get going. Okay, so here we have invoice from food traders. Again, even though it says receipts, you gotta remember that the labels are important for navigation purposes, but they are not what determines your abilities as far as the operations within the software. So let's proceed. So let's go ahead and drag and drop this one into our interface. Hold on. Okay. Okay, give it a few moments to upload. All right, here it is, right, food traders. So again, we're not going to go into the debate on how good the software, the accounting software is at recognizing and appropriating the receipts. That's not its job, right? It's our job as bookkeepers and accountants. But, occasionally we might find it useful, this interface, and therefore we need to know what we're doing. So again, in this instance right here, it says receipt. In reality, we can book invoices using this interface. All it does is that once you have receipt selected, you will not be booking it into accounts payable account. You'll be booking directly into expense account and indicating, essentially your source of payment. They do have an ability to book it through AP, and we will explore it during May simulation, right? So stay tuned. We'll cover how it works with the bill and how you can do it through accounts payable. But for today, we'll just work with the receipts interface. Again, even though it says receipts, you can book invoices through it, and we will demonstrate it right now. So let's get going. Okay, food traders, how we're paying? We're paying with a credit card. Okay, here it is, payment date. Again, the software picked it up correctly, right? Wait a minute. Okay. The software picked up the date correctly, except that it was the invoice date. And if we were doing live accounting, or if it was true receipt, it would work fine. In this case, we paid it on 4/12, even though the invoice was dated 4/5. We just have to adjust it, right? Again, in our simulation for this specific company, we're not using the concept of cost of goods sold. We'll explore it in future simulations. In this case, these are our supplies, right? And let's take a look. Okay, we have food, right? Purchases, meat. So here it is, 6,200. Description, let's continue using invoice number, right? So this way we can reference. All right, what else? We can put it in the memo. So here it is. Again, even though the amount is showing up once, right, it is both in debit and a credit. So let's take a look what's being debited, what's being credited. So we have two accounts involved, right? 21,100, right, and 6,200. Expenses go up when debited. We know that by now, right? So it has to be debited because we're spending money. What else is happening? Well, we are purchasing it using credit card, and credit card is a liability. So even though we're spending money, we're borrowing that money as we are spending it. So again, debits and credits are in balance. This amount right here, right, it's a debit to account 6,200, right, and it's a credit to account 21,100. Now, some of you already noticed, and it's evident in this situation, some of these interfaces, they have limitations. And what is a limitation? We'll see it throughout this simulation, is that you can only pick one account right here, right? So you can only expense or whatever, the transaction will involve only one account. So when you do have an invoice that hits multiple accounts, well, you can't use this interface, right? So it wouldn't be that convenient. But for this one, works perfectly. So let's go ahead and continue. All right, create expense. Everything looks fine. Again, see these accounts, they're showing up right here. It's important to understand that you have this amount right here, right? But it is both. It's a debit to account 6200 and it is a credit to account 21100. All right, and here it is. We booked that one. All right, we have to-go packs next. Let's continue, solidify our knowledge. Okay, gotta give it some time to refresh. It is an online version. Okay, here it is. Again, see, it's not good at recognizing the expense accounts. That's why, again, it is important to understand debits and credits, and it is important to be able to identify the right expense accounts. What is being debited? What is being credited? The software will not do it for you. You know, it is a misleading assumption to say that, oh, well, QuickBooks will put it in the right bucket for me. No, it won't. So again, let's continue. What do we have? All right, we're paying this one with a credit card. Oops. All right, again, see, it picked up the payment date, but it actually picked up the invoice date, which is fine. You know, again, not a big deal. We can easily correct it. All right, so in this case, we have food containers. Let's see, that's one of our supplies accounts. That's going to be our restaurant supplies. All right. Okay, amount, it picked up the amount correctly. So again, the softwares that process invoices, it's a challenging task, let me put it this way. I know it firsthand, I know it from industrial experience, and that's why, again, there's always a human that's involved at making sure that everything gets allocated to the correct buckets. So here we are. Let's solidify our debits and credits. So we know that we are borrowing, right? So our liability goes up, and we know that our expenses are going up. Here it is, debits and credits are in balance, right? Even though the amount is entered once, it is both a debit and a credit. It is a debit to account 6100, and it is a credit to account 2100. Again, what becomes evident from this interface is that we can post very limited number of invoices or receipts using this interface, right? Because it has to match, right? It has to basically be identical debit and identical credit to two different accounts, which is, again, occasionally it's convenient. It serves the purpose, right? So here we are. All right, gives us an opportunity to review. Accounts are correct, right? Restaurant supplies, credit card, we're paying with credit card, all good. Create expense. All right. Okay, next one was paid with a check. All right, so let's go ahead and again continue practicing uploading it this way. Okay, here it is. Let's review it. All right, we're booking it as a receipt, right? Remember, we're bypassing accounts payable account. In May simulation, we will use accounts payable account, and we'll show the debits and credits behind it. Okay, so again, PE, clean typo. All right. Okay, in this case, we have cleaning. Okay, good to go. Oh, wait a minute. This one we're using check, so let's put a check number in the description. And just again, it's important to make sure we have information. wherever possible. We can also put it in reference number, doesn't hurt, because again, it will help us to identify it during reconciliation and any other research that we do. All right, so here we are. What's going on? Oh, the account. Yes, of course. Bank account. Well, we know one thing for sure, right? Once that check clears, our bank account balance will be reduced by $230.21, right? What else we know? Well, we're spending money on cleaning supplies, right? So our expenses for that account go up, and expenses go up when debited. So again, assets are oops, that's a little too much, right? Different one. So we know for a fact, right? Assets are reduced when credited. Bank account is an asset. We credit it to reduce it. What else we know? We know that expenses go up when debited. Cleaning supplies is an expense. We debit it to increase it. Debits and credits are in balance, right? So we're good to go on that end. All right. Amount correct. Date correct. Okay, let's get rolling. Okay, another opportunity to review. Looks good, right? Even though, again, the amount is entered once, that's kind of the feature of this interface. You can only enter one amount, right? So if you have, a check that is paying multiple categories of expenses, can't use this one, but that's fine, right? Again, as long as we know what are the debits and credits behind its interface and how we use it, that's our objective, right? And then we'll use the tools that are available at our disposal to achieve what we need to achieve. So let's go ahead and, again, solidify. Debited. This account is debited by this amount, right? And this account is credited by this amount. All right, we created that one. Okay, we have drinks. Again, let's continue with our upload. We want to solidify our knowledge of that interface, right? Before we move on. All right, just give it a few moments. Here it is. All right. Okay, so we're paying soft drinks. Okay, it's a credit card charge. All right. Payment fine. What is it? These are our drink purchases. All right. Okay. Copy and paste it in here. All right, very much similar. You know by now, but let's solidify. Expenses go up. Expenses go up when debited. What else is happening? We're borrowing, right? Liabilities go up, and liabilities go up when credited. Here it is, right? This amount, once again, in this interface, again, it's a simple, but unfortunately or fortunately, limited interface, right? Everything comes, there is pros and cons. So again, here we can only enter one amount, but again, remember, it always serves as a debit and a credit, right? So in this case, this account is being debited. This account right here is being credited. Okay, let's move forward. Yeah, solidify. Okay. All right, we have utilities. Okay, let's continue. Okay, I'm going to give it one reload real quick, make sure it uploads. Okay, here it is. All right, so PE, utilities to go. Okay, in this case, it's a bank account. We're paying with check. All right, payment date. All right. Oh, picked up account correctly. Utilities, right? It saw that. So, hey, it does occasionally do a good job, but nevertheless, that's what we do, right? Bookkeepers and accountants, we got to make sure that debits and credits are correct. All right. That's a check. My apologies. Let's make sure we enter it. All right, debits and credits. So bank account balance will go down. So I got to credit that one. Expenses on utilities will go up. Got to debit that one. Here it is. Debits and credits are in balance, even though the amount is here once. This amount serves as both debit and credit. It is a debit to account 63,100. It is a credit to account 11,100. All right. Now see this one, we wouldn't be able to enter that interface. Why? Because if you remember from previous months and from other simulations, we're hitting multiple expense accounts, right here. And the interface we just covered can't let you do that, right? So we have to use checks. Right? We have to, because see, that's where we can use multiple lines, and therefore we can have multiple expenses. So again, we'll get it in a second. So let's do the release. Okay, account, correct. Payment date, 4/24/2020, check 10/12. Okay. See, they're showing up right here. It recognizes it, right? And they're already entered. This one, yep, double check, everything is good. Debits and credits, right? Okay, so in this case, first thing first, we know for sure that bank account number, bank account balance will be reduced. So it has to be credited. All right, expenses will go up, and here they are. We have all these various expenses, and expenses go up when debited. All right. All right, debits and credits are in balance. We can go ahead and book it. Before we do, remember the limitation of the previous interface. If all expenses were summed up to just one line item, to one expense, and debits and credits were identical, we could use the previous interface. In this case, we have multiple expense accounts being debited, and therefore we have to use this interface. Or there's other interfaces as we demonstrated, but the previous one would not suffice to book this transaction. So again, it's very important to understand the capabilities and limitations of the tools you use so that you can use them appropriately. Let's go ahead and book it. Again, just to solidify, these amounts right here, they're debits to these accounts, to these expense accounts, and again, makes sense. Debits increase expenses, expenses are going up. And this amount, which is in sum of these amounts, is a credit to this account. And this account is an asset, it's a bank account, and assets are reduced when credited. Okay. Let's go ahead and book credit card receipts. Again, we can continue using our drop function for some of them. Again, it's important to understand the capabilities and limitations, and we'll see what we can and cannot book through that interface. All right, first we have gas station receipt. We've done it before. Let's do it again. All right, here it is. We book it as a receipt. Continue. All right, gas station. This one is a credit card. All right, payment date, correct. In this case, it's fuel. All right, let's use transaction number. Okay. Again, debits and credits, we know by now, but let's solidify our knowledge. expenses on fuel go up, expenses have to be debited. Liability goes up because we owe more money to the credit card company, to that bank, right? All right, debits, credits, and balance. We entered once here, but it is a debit to account 63,200, and it is a credit to account 21,100. Again, review, solidify. Okay, we have another gas station receipt. Okay, here it is. Okay, very much similar. The only thing that changes is the amount. So let's continue. Again, practice makes it perfect, right? So okay, debits and credits, expenses go up. Very much identical. Okay, and liability goes up as well because we're borrowing. Here it is, debits and credits are in balance. Although entered once, it is a debit to this account and it is a credit to this account. All right, one more. We're on a roll today, right? We're dropping in those PDFs, uploading our receipts and invoices and booking them through that interface. We want to solidify our knowledge, right? Okay, here it is. Oh, wow, cool. It picked up the mobile service. So again, occasionally it does a good job, but again, we have to make sure that we review it and that everything is booked correctly. In this case, it's a credit card. Okay, this is correct. It's not interest, so it's telephone. Okay. Okay, amount is correct. Good to go. Okay, debits and credits. Very much similar, right, to what we've done before. Okay, debits and credits are in balance, even though they're entered once. This account is debited, this account is credited. All right, solidify the knowledge. All right. Returns. Now, returns we cannot book through that interface, right? But luckily there's others, right? So here we are. We have what's called credit card credit. Again, the labels, don't take them at face value. Just know what they let you do at what interface you open up. Because technically for us it's a debit, right? So again, but that's fine as long as we know what we're doing. All right. Okay, so in this case it's not member draw. We are returning part of the installation items for that cooler that we purchased, and since everything associated with that installation was booked into the asset account, all right, so we have to remove it from there. So let's make sure we find it. Equipment. Okay, so this amount will be reducing the balance of our equipment, right? Because everything that we use to install that cooler, that goes and gets capitalized, right? But now we ended up installing it. We didn't need one of the wiring kits that we purchased. Probably we purchased just in case, just again, so we don't get stuck. we were lucky enough to install it with just using one wiring kit. We're returning the other, therefore we will be reducing the balance of that asset. So what's happening here, right? Well, our liability will be reduced, and liabilities are reduced through debits. And again, even though here it says credit, credit card, credit, funny name, right? As long as we know what that interface allows us to do, the name becomes only somewhat relevant, right? So let's go ahead and book it. Liability is reduced through debits. Right? What else is happening? Well, the amount associated with our equipment will be reduced, and equipment is an asset. Okay, here it is, right? Oops, no, it's not the full amount. It was $27.19. Got to make sure we correct everything, right? Always double check. $27.19 right here. Okay. So what's happening, right? This amount right here is a credit to account 51,000. Equipment will be reduced, right? When asset is credited, it is reduced. All right. What happens when we return that wiring kit? Well, the online market will refund our credit card, right? And therefore our balance on the credit card, the liability will be reduced, and liabilities are reduced when debited. Therefore, this amount right here is the debit to account 21,100. Okay, so let's go ahead and book it. And we have a payment, right? We're paying our credit card. There are multiple ways to do it. So one of them, we can do it through transfer. We've done it through other ones, but let's do it through transfer just again for kicks and giggles and diversity. So we're going to be moving money from our bank account. We're going to be moving it, right, to our credit card account. The amount is $3,166.11. Date 4/15/2020. All right, 647633. All right, here we are. Let's make sure we understand our debits and credits. What do we know about our bank account? Well, every time we pay our credit card down, money is transferred from our bank account, and right here it's from. What's important to understand is that when money is transferred from the bank account, and bank account is an asset, it's reduced. Therefore, it has to be credited. What else is happening? Well, the money is transferred to our credit card company, right? To that, essentially, to pay down the liability that we have. Therefore, liability 21,100 will be reduced, and liabilities are reduced through debits. So here it is, debits and credits are in balance, even though they're entered once. They're entered once right here, right? But it's always a debit and a credit. It has to be. Every transaction has to have a debit and a credit in double entry accounting, right? So here it is. This amount right here is a debit to account 21,100, and it is at the same time a credit to account 11,100. Let's go ahead and book it. All right, and we're done with booking receipts and invoices, and we're going to move forward with reconciliation, see if we did a good job.